Crypto as an asset class is highly volatile. It's for people with a high tolerance for risk and who understand they can lose the entire value of their investment. Crypto may be more susceptible to market manipulation than securities. It's also not insured by the FDIC or protected by the Securities Investor Protection Corporation. Investors in crypto do not benefit from the same regulatory protections applicable to registered securities like stocks or bonds. Fidelity Crypto is offered by Fidelity Digital Assets. Brokerage accounts and securities trading are provided by Fidelity Brokerage Services, which does not offer crypto as a direct investment or provide trading or custody service for such assets. Throughout this interactive conversation, you'll hear us use words like cryptocurrency, Bitcoin, Ethereum, and many more. We may use terms like crypto or digital assets as substitute words for specific coins, or to talk about the ecosystem as a whole. Just remember, all coins and tokens have very different attributes and use cases, and the ones we talk about here are only part of a wide variety of digital assets in existence. Hey there, welcome to the Covering Crypto live stream. I'm Jim Armstrong with Fidelity. If you are interested in investing in cryptocurrency, but you're not quite sure where or how to get started, well, two things. First of all, you're in good company. And second of all, you're in the right place. There's a lot of options that confront you when you're thinking about investing. Spot ETPs, regular spot crypto, ETFs, buying equities or stocks in crypto-related companies. There's a lot to try to figure out, and we're going to talk about all of that today. We'll also touch on some of the risks associated with investing in cryptocurrency. We'll talk about potential tax-advantaged ways to invest in crypto in retirement accounts, and we'll take your questions along the way, both ones that you sent in when you registered, as well as any questions that you have for us during the live stream itself. To get answers to those questions, we got a couple of fantastic guests, no strangers to the live stream. We're thrilled to have them back. Guys, welcome. Thanks for being here. And I'd love it if you could each just introduce yourselves real quickly and tell the audience a little bit about the perspective you bring to today's live stream. And Lubna, we'll start with you if that's okay.
Thank you, Jim. Always great to be here. I'm Lubna Lundy. I'm a director on the Fidelity Asset Management Investment Product Group. I'm on the equities team focused on thematic investments, and I have the pleasure of creating solutions that help connect investors to the crypto space through crypto industry ETFs, which are very different from spot crypto ETPs, but we'll talk about that more during the show.
We 100% will, Lubna. Thank you for that. And Brian, how about you, please?
Hey, Jim, thanks for having me back. I'm a product manager supporting the Fidelity Digital Assets business, so happy to share my experiences with the various different options for how you can securely hold crypto.
Love it. Kristen Smith is with us also today. She is also on the Fidelity Digital Assets team. She's been a guest on the show in the past, but today she's going to help us sort through some of the interactive elements to the live stream. Hey, Kristen.
Hi, Jim. Happy to be here. And yeah, as Jim mentioned, I'll be sifting through all the questions that come in through our live chat today and bringing as many as we can through our live Q&A portion of the segment of the show today.
Love it. All right, let's just dive right into it then with a question that came in during registration from Manfred. It's a pretty straightforward one. It will shape our entire conversation. How do I get started in crypto? So today we're going to focus on investing in cryptocurrency, but as most people watching right now are probably aware, that's not why crypto was created as an investment vehicle. Different coins and different tokens have different value propositions, different use cases. They're worthy potentially of investing because of the things that they do, the problems that they solve, the value they create in the real world. We've talked a lot about that in other episodes, so we're really not going to dive deeply into why cryptos have value today. But I would definitely suggest that you visit fidelity.com/crypto or fidelity.com/crypto help. Those are both really great resources where you can investigate more at your own pace, at your own time, to figure out maybe why an individual cryptocurrency might or might not have value. But Brian, let me toss Manfred's question to you, because let's say someone watching right now has done their research. They're confident that they're ready to invest in a given token or coin. What are some things that people should be thinking about just before they put that first dollar in?
Yeah, perfect place to start. Maybe I'll just offer some questions that you should be asking yourselves, starting with yourself personally. So what are your own investment goals and what's your time horizon? What do you already know about crypto and the investment you're looking to make? And then move on to, the questions about your particular investment. What is that investment? What do you know about it? What is the utility of that blockchain, that token, or that stock, and what is its value proposition? What is the history and how long has that investment or token blockchain existed? And remember that the answer to those questions will probably be different depending on each individual type of crypto. Not every crypto is the exact same thing. And then you move on to like, how comfortable are you with volatility in your portfolio? Crypto has a history of being very volatile, large swings, and also a lot of tokens will trade, 24 hours a day, 7 days a week, 365 days a year. You got to be ready for those price swings. After you spend your time answering those questions, feel what's right for you in your portfolio, then you get to choose where. And we'll spend most of our time today talking about those different options. Closing this out, one thing I think you'll probably hear us say several times today, is my guess, is always do your own research, look at your own personal investment goals. That, the space referred to as crypto is quite broad, and it can be a dangerous place out there depending on where you are. So taking your time to learn, research, hear various perspectives is really, really important as you get started. Joining a session like this is a perfect place to start.
Yeah, we think so too. Thanks, Brian. So let's grab a couple of questions that came in during registration. These are just two of probably hundreds very much like these. Ming and Juanita saying, essentially, how do I get started investing in crypto? And so, Lubna, we'll turn to you as we start to answer these questions. We're going to spend a lot of time on those two questions in specific because, again, as I mentioned off the top, there are spot crypto ETPs. There are crypto industry ETFs. There's spot crypto itself. There's equities that you can purchase in the space. So let's just dive right into it. Lubna, how do you help people make sense of all their different choices here?
For sure, I got you. So with spot crypto, generally that refers to spot trading in cryptocurrencies. This is where you buy actual coins like Bitcoin or Ethereum and you hold them in a wallet. Why might you do this? Well, for some people, they appreciate full ownership and control of their assets. They have the ability to transfer or stake coins. But we'll warn, with this approach, it requires secure storage, which requires attention to security, whether you're storing in a custodial wallet like Fidelity Crypto or a non-custodial wallet with something like a Ledger device, where security, it can require higher complexity and responsibility for private keys, which can be a burden for some investors. If you don't know what private keys are, they're like your digital password for access to your crypto, and they can be as long as 20 to 24 words. So very long mnemonic phrases, which is very different from like a 4-digit bank account PIN or passcode, for example. So that can be daunting for investors. But guess what? You can also get started in crypto through spot crypto ETPs. So spot crypto ETPs, or exchange traded products, they provide indirect exposure to the price of cryptocurrencies through an investment product available on a traditional stock market exchange. So investors purchase a share of a fund that invests in spot cryptocurrencies, which trades during stock market hours. So essentially, it's tracking crypto prices without you owning actual coins. In other words, you get exposure to crypto, but you don't necessarily own the coins or the tokens. For some investors, ETPs, they offer easier access via brokerage or trust or IRA accounts. There's no need to manage wallets or those long private keys that I talked about. And they can also offer more simplified tax reporting. But would want you to keep in mind that with ETPs, you don't own the underlying crypto. So with that, there's no ability to transfer crypto like with spot trading. Crypto trades 24/7. You should remember that. But an ETP, if you are invested in an ETP, you will have to wait until the market opens to buy or trade ETPs. Also, management fees apply in addition to transaction costs. Now, with the recent launch of the Fidelity Solana Fund, ticker FSOL, Fidelity now offers 3 spot crypto ETPs: the Fidelity Wise Origin Bitcoin Fund, ticker FBTC, Fidelity Ethereum Fund, ticker FETH, and the Fidelity Solana Fund, which again is ticker FSOL.
And how about crypto industry related stocks? That's similar but different.
Yes, now you're talking my world when we talk about crypto equities, right? Or crypto stocks. So crypto related stocks or equities, they are individual companies that are tied to the crypto industry. So think about crypto mining companies, exchanges, blockchain tech companies. For some investors getting exposure to crypto via stocks, it's just easier. You can buy through a traditional brokerage account, and for some people, that just may be a more simple way to integrate crypto exposure into their portfolio. But even in a crypto-related stock like spot crypto, there is potential high volatility plus risk. Remember, crypto is highly volatile. Also, regulatory uncertainty for crypto that can impact crypto-related stocks. Also, investing in a single stock, especially a crypto-related stock, that can bring some concentration risk. So you just want to be mindful of putting all your eggs in one basket, as we might say. Consider buying a basket of crypto-related stocks in the form of a crypto industry ETF or an exchange-traded fund. With a crypto industry ETF, you can access and invest in multiple crypto industry related stocks through one ETF. So more potential diversification.
And I think that distinction, Lubna, is probably pretty clear to most people. You can buy equities in maybe one company that you are interested in, or you can buy the ETF, which is a bundle of companies. That's pretty clear. But how about the ETF versus ETP distinction? How can you help make that clear for folks?
Yeah, I'm glad you asked that. A lot of people use the terms interchangeably. There are some differences. And so I would think of an exchange traded product as the broader umbrella category to describe any investments that trade on an exchange like stocks do. Both crypto industry ETFs and spot crypto ETPs are examples of exchange traded products. It's just that ETFs or exchange traded funds, which happen to be the most common type of ETP, they have a very specific structure, which is the investment fund that tracks an underlying index. So I know that was a lot. So to recap, I'll just say this. If you're looking at spot crypto, you're looking to directly own a particular type of crypto like Bitcoin or Ethereum. With spot crypto ETPs, you're seeking to track the price of a crypto. And as an investor, you get exposure to the crypto's price through a fund structure without owning crypto directly. With crypto-related stocks, you're investing in publicly traded companies in the crypto space without owning crypto directly. And with crypto industry ETFs, that just means you're investing in companies, again, within the crypto ecosystem without owning crypto directly. So if anything you take away, just remember with spot crypto, you own crypto directly, and all the other options, you do not own crypto directly.
A lot of ground covered in 10 or 11 minutes, so I want to thank you both for that. Turn to the live audience right now. We'd love it if you could vote and tell us what you want us to talk about next, or if you're ready to move on, because again, that was a lot. I will turn it over to Kristen to let us know if there is a clear winner.
Okay, so it looks like with 36% of the vote, we've got investing in crypto industry ETFs and crypto stocks.
All right, Brian, take 5, because this is Lubna's area, as she likes to say. So so people are interested in maybe that distinction then, Lubna, you could talk about now, or buying stocks one at a time, perhaps?
Yeah, I love it. So first and foremost, again, when you're investing in a crypto industry related stock or even a ETF, again, you are looking to invest in publicly traded companies that are part of the crypto industry or ecosystem. I will say that we do get a lot of questions from folks around, because you are getting broader exposure to different companies in the space, how might you think about investing in these different type of companies? What are some different things you should look out for across, whether we're talking about blockchain technology companies or crypto exchanges, crypto miners as well? Get a lot of questions about just understanding the different companies that make up the ecosystem. And so if we were to look at different growth drivers across the different companies, we'd definitely say blockchain technology companies. They are building the infrastructure that crypto, AI, cloud, and Web3 applications depend on. That has been a really big focus area and an area that's been in demand. And so that's one thing you want to think about when you're talking about blockchain technology related companies in the ecosystem. Crypto exchanges, they tend to be more steady crypto companies, and their revenues depend on primarily trading activity versus just the price of crypto. But when trading declines, that does impact revenue and profitability.
Now let's go to some other viewer questions that came in during registration that talk a little bit more about the tactics here. Thomas wants to know why he needs cryptocurrency in his portfolio. And William says, what questions should I ask when deciding what crypto to invest in, or if I even should invest? So Thomas, I'll tell you right away, run fast and run far from anybody who tells you you need crypto in your portfolio. It could well be something that you consider after you've done your research, which takes us to William's question. Like, how do people start to figure out if it does have a place in their portfolio? And Lubna, I'll start with you.
Yeah, Jim, as you said, it's not for everyone. And Thomas, you alone can answer if you'd like or would not like crypto in your portfolio. Investors, I know it can be overwhelming investing in crypto. There are so many different cryptos constantly launching or that have already launched into market. And so that can be a little scary for investors. So doing your research and having an understanding of the different types of crypto available, that's really important. While Bitcoin is the most well-known cryptocurrency, there are lots of altcoins to understand. And altcoin is any coin that's not Bitcoin, if you didn't know. So think about the utility of each coin. What does it do? What use case is it trying to solve? How is it different, as Brian mentioned up front? As anticipated, we're now seeing a growing number of altcoin ETPs that are launching or being filed to launch into the market. And so I know we always say, do your research. I always like to specifically encourage folks to take advantage of the Fidelity Learning Center at fidelity.com/learncrypto. We have a crypto-specific infographic entitled How to Evaluate a Cryptocurrency that I find to be super helpful. It highlights a checklist of things to look out for as part of your research. And again, I would encourage folks to take advantage of that.
And I know we have a checklist as well for today's show to help people start to do that work between what might have value and what might not.
Yeah, so we would bucket into two different buckets. One, understanding the use case and the utility of the token, and then two, understanding more about the market metrics. So if we start with the use case, in crypto, a white paper is a really important evaluation resource. So you want to find that white paper, actually read through it. It does help you learn more about the token's utility, its intention. What is it trying to solve or improve? Is it inflation, like in the case of Bitcoin, or various technology challenges in the case of Ethereum? So you want to also look to see if there's a website associated with the coin. If there isn't, that could be a red flag, but I will say that with crypto, social media plays a very large role in the crypto space. So you want to see, does this network have a social presence on big platforms? What's the social sentiment? What's the overall digital presence, right? And then with market metrics, we would encourage you to look at metrics like market cap of the crypto strategies. A large market cap doesn't necessarily guarantee that the investment is right, but similar to the stock market, larger strategies may be considered less risky due to their value potential, like with large cap stocks. Trading volume, that's another good indicator of activity and interest in the token. And then also would encourage folks to review and try to understand the price history.
We get a lot of questions, Lubna, as well about meme coins. How do you help people understand what to do there? That's, I feel like, a particularly dangerous area, potentially.
Potentially. Yeah, meme coins. We always have to talk about meme coins. They tend to be community driven and inspired by widespread internet memes. I think some started out as a joke. For some, it's more about the community or the brand. That's the value of the meme coin versus a technical development or innovation that some other projects may aim to achieve. With all of that said, just keep in mind that there might be higher potential loss with these type of coins. So as you're evaluating different coins or tokens to invest in, you want to, know what you're investing in. Is it a community or a brand, or is it some sort of innovative tech-focused project? And you also want to know, could that come with a higher potential of loss? So long story short, make sure you understand what you're looking to own, what volatility may be associated with it, and take all of that into consideration when deciding what to own and how much of it to own.
We have another registration question that came in, Brian, that I'm going to send your way. It came from a registrant named Jim. He wants to know how secure crypto is as an investment, especially compared to a stock or ETF or other equities. I know that there's a lot to cover there, but high level, how would you explain the risk here?
Yeah, absolutely essential question for folks looking to get started investing in crypto. Crypto has a huge history of market volatility, hacks, scams, fraud, all things that you should definitely be aware of and start asking questions. And again, do your own research before you invest. Just some interesting things to think about. Depending on if you're investing in like an actual token or blockchain, there's the actual hardcore cryptography, the cybersecurity that underlies these blockchains. That's those private keys we talked about earlier, these private keys that they're what holds your crypto. They're what allow you to spend it or what allow you to move it, give it utility in the ecosystem. The flip side would be if you or whoever's holding those private keys loses those private keys, makes a mistake with those private keys, they get stolen. Crypto is very difficult, sometimes impossible to recover if it is lost or stolen. That being said, the specific manner in which you hold your crypto investment either introduces or mitigates some risk. We'll talk about those options a little bit in the future, but crypto is not one thing. Crypto is a whole universe of specific products, specific blockchains. We talked about stocks and ETPs and ETFs. Every one of those has its own risk and cybersecurity, crypto security considerations. If you're interested in the spot crypto, you may use a digital asset custodian, and those custodians do play a role in some of these other products as well. Custodians like Fidelity Digital Assets, use things like advanced cryptography. You may hear stuff like fully offline physical cold storage facilities, multi-factor authentication, all these institutional quality safeguards customized to those unique risks of crypto to mitigate risks. That being said, if you're using a custodian, they're going to do all these great sounding things, but you're almost certainly putting some level of trust in that custodian to hold these private keys, to hold these investments on your behalf. Going out to the market side, crypto is still a newer asset class. There's not much insurance, if any insurance out there, if your crypto gets lost or stolen, and it's more susceptible to market manipulations. And we keep coming back to that market volatility. You should expect those large price swings, both positive and negative. You need to be prepared and ready for those to happen. Now, of course, all of those different things, and there's even more, sub-bullets in all those categories are unique depending on each of those different investments that Lubna was talking about earlier. So a meme coin is going to look different than Bitcoin, is going to look different than an ETP type product. So our crypto live stream webpage, I'll send another pitch out for that. There's plenty of materials out there with deep dives.
We will always take a gratuitous plug for that, Brian. Thank you. Now we have a few Fidelity-specific questions. We actually got a lot of these, as a matter of fact. So we'll switch to those right now. Michael wants to know how owning FBTC, which is the spot Bitcoin ETP, if you've been paying attention, it's a lot of letters, but FBTC, how is that different from owning actual Bitcoin? Is it a good introduction to owning cryptocurrency? Richard wants to know about the difference between holding an ETF versus coins where you have custody. And I can see, I'm peeking at the chat, the number one upvoted question right now that I can see is Joe's question asking, can you explain the main difference between buying actual Bitcoin in a Fidelity crypto account versus buying FBTC? So Lubna, this is an area of intense interest. What's the difference?
First and foremost, FBTC is the Fidelity Wise Origin Bitcoin Fund. It's a spot Bitcoin ETP, as Jim mentioned. Like spot crypto ETPs, they are for investors with high risk tolerance because you are investing in crypto, which is highly volatile and could become illiquid. So we have to say that up front. Now, for Michael's question, as a reminder, with spot crypto ETPs, you're getting exposure to the price movements of crypto through a fund that invests in spot crypto. The same concept applies to Fidelity's other spot ETPs that are in the market that we talked about. So owning a spot crypto ETP like FBTC gives you exposure to crypto, but you don't actually own Bitcoin like you would find or like you would own if you had a crypto wallet and purchased Bitcoin through in that way. Since Michael asked if FBTC is a good introduction to owning cryptocurrency, I just want to reemphasize that you want to understand the different use cases, the value prop, technology for the crypto that you're interested in buying. And so understanding that Bitcoin, which is the underlying asset for FBTC, understanding that it aims to be more of a store of a value, versus Ethereum or Solana that serve as platforms that are more tech focused. That's a critical first step. Now, for Richard's question about crypto related stocks and ETFs, again, you're getting exposure to the crypto industry, the ecosystem through investing in single stocks or ETFs that you would purchase in a brokerage account. This, of course, is different from owning actual coins on an exchange or wallet, where again, you own the underlying crypto. So it does come down to preferences, risk tolerance, comfort level. I think it's important to emphasize that with all of these approaches, there will be some degree of risk because whether you own an individual coin or are investing in crypto ETPs, they all can be pretty volatile and come with different risks.
One thing, Lubna, that our live stream viewers have told us is they really appreciate a nice, honest pro-con list. And so we've built one for ETPs that I'd like it if you could take us through.
I appreciate a good pro-con list as well. So some benefits, some people, they do take comfort with the fact that ETPs are subject to regulatory oversight and in a familiar vehicle that can make ownership and management more convenient, especially when you think about taxes. You also can take advantage of other benefits of ETPs, like the fact that you can own ETPs in multiple account types, whether it's an IRA or a trust, for example. But the trade-off is you don't own the actual underlying asset like Bitcoin. Instead, you own a share in the spot ETP, or in the case of crypto stocks and ETFs, you own a share of the company that is part of the crypto industry or ecosystem. There's also trading differences that you should consider. Coins, they trade 24/7, but exchange traded products only trade during market hours. And then there's fees. Fees may apply to buy and sell, whether it's a transaction cost or a spread. And then speaking of fees, the ETP will include management fees that we talked about that don't necessarily exist when you own directly.
And I know we've talked about ETFs already, but I don't want to go too far away and give you a chance, Lubna, to talk a little bit more to Richard's question about exchange traded funds. Anything else that you think is worth mentioning there?
I would just emphasize the fact that, Fidelity, we have a crypto related exchange traded fund in the market, the Fidelity Crypto Industry and Digital Payments ETF that launched in 2022. It's one of many crypto industry ETFs in the market that I mentioned before. It does give you broader exposure to the crypto ecosystem. Again, those miners, the crypto exchange companies or exchanges, and also blockchain technology companies. They've been around before. Spot crypto ETPs were approved in 2024. And again, they are another vehicle or way in which you can diversify, portfolio with these type of strategies.
Brian, a couple minutes ago, you mentioned custody and storage concerns, and I'd like it if we could dive a little bit deeper on that, because all of the things that Lubna just talked about all are, as you've suggested as well, come with different levels of responsibility in terms of custody and storage.
Yep, and each of those options we just talked about does have a different model for the custody and storage of the actual investment. So one thing that's interesting about crypto is it really is choose your own adventure for how you're going to hold that crypto storage, and it can definitely be overwhelming if you're newer to the space. So, one first example would be self-custody. This is the example where you are taking full responsibility for securely holding those crypto tokens on your behalf. So that may be something known as a hardware wallet. It may be a software wallet on your cell phone, but you hold those private keys yourself. Just like, the wallet you have in your pocket or your purse, this could be your crypto wallet that you carry with you, and you have full accountability for all those things. You then could also use an exchange or a custodian to hold your spot crypto. This would be where you'd probably create a new account, a different type of financial account, where you would go to that third party, like Fidelity Crypto, to buy and sell different crypto tokens. You could then likely withdraw those crypto tokens to your own self-custody or to somewhere else in the ecosystem. You then move into the investment products like ETPs. Generally, these ETPs will, select a different custodian to actually hold the tokens, the crypto tokens that make up that investment product. So even though you're not directly using a crypto custodian in this example, the product you're investing in, they have a crypto custodian. You're kind of looking through and still having another layer of trust in an institution. And then finally, you get to the non-digital asset products, the non-crypto native, so stocks, ETFs, things like that. These generally will follow your traditional financial services processes. So that's where you probably don't need to sign up for an account. You can use your existing brokerage accounts, things like that, to hold those assets, where those other options may require a new type of relationship or account.
Got it. Speaking of other types of accounts, let's talk a little bit about potentially tax-advantaged ways to invest in cryptocurrencies through a cryptocurrency IRA, individual retirement account. We often get questions about them, like these two. Keith wants to know, can I have a crypto account within my Fidelity IRA, or do I need to create a crypto IRA? Dennis has a similar question, only he's asking if he can invest in cryptocurrency in his Roth IRA. Great questions. Keith, I'll start with yours. So the answer is no. You can't just add spot cryptocurrency into your existing Fidelity IRA. However, you can put either a spot crypto ETP or a crypto industry ETF into an existing Fidelity IRA. Your current retirement account, whether it's a Roth, a traditional, or a rollover, can hold any type of ETP or ETF. So don't get confused just because the underlying assets that we're talking about today in these ETPs and ETFs are crypto-based. In any event, your existing brokerage, Fidelity IRA, can hold ETFs and ETPs. However, at Fidelity, to invest directly in cryptocurrency, to own spot crypto inside a retirement account, you do need to open a Fidelity Crypto IRA, which is a self-directed individual retirement account offered through Fidelity Digital Assets. And this account is linked to a Fidelity brokerage IRA for funding purposes. And the same thing goes to Dennis's question as well for a Roth IRA. You can absolutely open a Fidelity Crypto Roth IRA to invest directly in cryptocurrencies. But again, to put a finer point on it, if you want to hold a crypto ETF, crypto industry ETF, or a spot crypto ETP, those can go in your existing brokerage IRAs. And remember, if you invest in a crypto ETP or crypto ETF, you don't own the actual cryptocurrency. I think Lubna has said that a couple of times. You own part of a fund or a product that holds cryptocurrency as its underlying assets. You cannot put an ETP or an ETF in a crypto IRA, and the opposite is true as well. You cannot put spot crypto in a brokerage IRA. That was a lot, and it came at you fast. So for more information, I would definitely suggest you go to either fidelity.com/crypto-help or fidelity.com/crypto. In any event, these websites bounce back and forth between and among each other, so you can start with one and continue your learning journey there. Let me grab another recent live chat question that came in along the same lines. This person who wrote in during a show said, are there any potential advantages to opening a crypto IRA? And so again, I would just say it's important to consider your risk tolerance and how you feel about volatility. But potentially a few advantages to crypto IRAs are tax-deferred growth potential within a traditional crypto IRA or tax-free growth potential within a Roth crypto IRA. But as we've mentioned before, your time horizon is a really important factor to consider. For example, if you're someone who feels like they're fairly close to retirement, then a very big portion of your portfolio dedicated to cryptocurrency might be a riskier move. However, if you're planning not to retire for a very long time, or if cryptocurrencies are perhaps part of your estate planning, then you might potentially then have the ability to ride out some more short or medium term volatility. That was a lot for me. I'm happy to turn it over to Lubna and Brian for their couple closing thoughts before we head to live Q&A. I see a lot of questions coming in. We've set aside time for that. But before that, sort of high level, Lubna, what would you make sure viewers took away from this live stream?
Yeah, a couple takeaways that I would include for viewers. One, the fact that investors have a number of options to get exposure to crypto, whether directly or indirectly, that continues to grow. So make sure you understand the pros and cons between these different options. There are so many different resources available to us, and so I can't stress enough about taking advantage of the Fidelity Learning Center. And if you're already watching this crypto live stream, kudos to you. You're already taking advantage of some of our educational resources. But just again, I'll remind folks to check out the fidelity.com/learn crypto page for more great resources on the crypto basics.
Cool. And Brian?
Yep. I agree. Well said. I think biggest takeaway is you have a lot of options out there, and hopefully you have some fun exploring and learning about all these different options. And I'll just say it one more time, do your own research and think about your own personal investment goals, your own personal risk tolerance, and what you're actually trying to accomplish as you go through all this fun research.
Got it. Okay. Fun. That's an interesting way to put it. I think it's fun. I don't know if many people do, but I think so. Hey, Kristen, sorry for the delay. I'm sure you have been swamped sorting through live questions, but where should we start in terms of questions that have come in from live viewers?
Yeah, well, we have a couple of foundational questions around how to analyze crypto and what indicators or metrics people should look at when picking a crypto. And then also, Jay wants to know, um, are the terms coin and token interchangeable?
Oh, that's a great question. Well, I'll start with that one. And I think the answer, and I'd love to hear otherwise from Brian and Lubna, I've always learned them as yes, they largely are synonymous with each other. I think there might be some nuancy distinctions, but what do you guys say?
Yeah, I would agree. If there are nuances, I think we'll all be learning together, right?
Yeah, I think it's one of those things that this is still a relatively new space. So I really appreciate Jay's question that, yeah, sometimes you can hear people using words that are synonyms for each other, but then the opposite is true. And some people will use, Bitcoin as a synonym for cryptocurrency. And you want to be careful of that. That's obviously not a good one, but coins and tokens are fairly interchangeable. The first question was about evaluative metrics. Brian, Lubna, how would you help somebody? I mean, I know you covered some of them, Lubna, but what else would you add to help somebody figure out what metrics to be looking at?
Yeah, is it okay to restate what we've mentioned just in case anyone
Sure.
came on a little late? We did mention, look, when you are doing your crypto research, to take a look at the market metrics. Looking at the market cap of different cryptocurrencies can be helpful in addition to the price history. I know those are two huge metrics that I've, leveraged and looked at, and that others in the industry have looked at as well. I don't know if there's any others that you would add, Brian.
Yeah, maybe it's specific to a blockchain investment. I might look at adoption metrics in addition to like the market cap and financial metrics. So that's where you can see, number of transactions, number of addresses, and number of users, uptime. You could also look at the ecosystem. So the number of developers that are contributing to the code bases of these blockchains, the number of decentralized applications that are on top of these blockchains. To get a sense for, is this something you hear a lot about but isn't actually being used, or is this something that has already seen widespread adoption?
Yeah, that's great. Kristen, what else?
Yeah, Jay would like to know, do ETPs own one or many cryptos?
Oh, that's a great question. And the answer is one. So like, for example, and I know there was a lot of letters we threw at you, but let's walk through the ones available at Fidelity right now. F for Fidelity, BTC, is the Bitcoin ETP. So it holds as its only underlying asset actual Bitcoins. F for Fidelity, ETH for Ethereum, FSOL, Sol for Solana. In any case, the only underlying asset of an ETP is the actual cryptocurrency itself. That's distinct, again, from the ETF, which is, think of it as a basket of stocks, crypto-related industry stocks in those companies. Those are publicly traded companies inside the ETF. Inside the ETP, the only thing in there is actual cryptocurrency. But awesome question. But what else?
Well, sticking along the theme of ETPs, Mayank would like to know, can ETPs be exchanged for the underlying crypto?
When you buy an ETP, as Lubna has explained, what you're buying is a share in a fund, right? And that fund holds crypto as its underlying asset. So you do not own cryptocurrency if you buy a share of an ETP. You own a piece of an ETP. So to go from, say, FBTC, where you own the spot crypto Fidelity ETP, if it's FBTC, you own an ETP. You'd have to sell out of it, go to cash, and then buy Bitcoin or whatever you want to do with it after you realize the profit or loss from that sale.
Yeah, I think we mentioned it on the pro-con list. Yeah, the fact that if you are purchasing the ETPs, one of the factors is you do not own the underlying assets, so you do not have an ability to transfer or you don't own that underlying asset.
What else, Kristen?
What would you tell somebody that's starting to invest?
Oh, I love that one. I've got one, but I'll let you guys go first.
I don't want to sound like a broken record, but I think it's the doing your research. I think I saw a stat that people do more research when trying to buy a new fridge than they do on actual investment opportunities. And so I think when it comes to crypto, there's a lot of FOMO that may happen and people just buying because they hear that something is popping or doing well in the market. But I think the more you understand about the different value and the projects that are behind these different cryptocurrencies, especially as we talk about altcoins, I think the more it all makes more sense for folks. And so I think that research is so critical, especially when we talk about crypto investing, because it can feel like a somewhat obscure, not as tangible space as when you think about like equities and investing in a company or a stock. So I think the invest our research is critical when it comes to this space and taking advantage of the resources that are available to us to do that.
Cool. And Brian, how about you?
Uh, I'll double down on something I said earlier is have fun with the learning, like embrace the learning. Investments and in particular crypto investments can seem overwhelming. As long as you step into it with you want to learn, you want to ask a lot of questions, that's all part of the journey of figuring out the best way and what's right for your own investments and yourself.
And I guess I would add to that, feel free to start small. I think sometimes the numbers are so big, it can be intimidating. We sometimes actually get questions on the live stream that ask, do I have to buy a whole Bitcoin, which right now is, roughly $90,000 or, and the answer is no. Certainly through Fidelity Crypto as offered by Fidelity Digital Assets, you can start with much smaller amounts of money, dip your toe in there, learn by doing with just a few dollars, learning how the process works, getting used to what it feels like when your $10 or $20 investment drops by 10% or goes up by 15%, whatever the case may be. Learn by doing will help you get acclimated to what can be a relatively new ecosystem and go slow as well.
And Jim, can I just add one more thing?
Yeah.
I think a lot of us try to time the market or time when we think like a currency may go down or it's time in the market versus trying to time the market. And so that was definitely something that I always am thinking about.
Oh, you gave me another good one too. This idea of overthinking it that I feel like happens with crypto. Like you want to understand everything you possibly can. The great Peter Lynch from Fidelity always said, know what you own. But sometimes I feel like with crypto in specific, and this was the case for me, you can be so bogged down with thinking, I don't understand everything. I don't understand the mechanics of A through Z, therefore I'm out. Listen, again, you want to understand everything that you invest in, but don't let your inability to comprehend every single piece of every single process be the reason that you never invest in the space if eventually you want to try it. Gosh, that was a lot in, 50 minutes. We went a couple of minutes over, but I hope in doing so, we were able to answer a lot more viewer questions. So, Kristen, thank you for shepherding those to us, and Lubna and Brian, thank you for answering them for us.
Thank you.
Absolutely. Thanks for having us.
For everybody watching, thank you as always for your time. We really appreciate you spending time with us today. Again, remember to register for any upcoming live streams on the link that you can see on your screen right now. Send us questions when you register or join the live streams themselves, and we can answer your questions live. Thank you again for your time, and we hope to see you very soon.